Welcome back to Return My Capital. Today we're talking about ASML and a recently announced massive share buyback program. Now, if you're not familiar, ASML is a company involved with the semiconductor manufacturing vertical, and it is in particular involved with the advanced lithography equipment required for very high-end semiconductor manufacturing. So your highest end NVIDIA chips, those aren't possible with equipment that's fairly proprietary to a company like ASML or to ASML. Now, you see over the past year, shares have been hammered down nearly 26%, year to date down 2%. On the 5 year, it is still significantly positive, up 133%. But you see shares are well off all time highs, up here around 1100, now trading for $680. On the 52-week range, you've got 578 on the low end and a little bit over 1100 on the high end. Shares, even given the recent pullback, significant pullback, I mean, we're talking just over the past year, over a quarter it's been cut, but price to earnings on a forward basis still near 26, still near 26. The annual dividend is near $7. The yield is a little bit over 1%, which might not sound significant, but historically, this is one of those companies that has one of those dividend yields near 0.5%. So to see this over a 1% yield is fantastic. We'll take a look at some of the more historical dividend metrics on this company in a moment. Market cap on this beast is 270 billion. It's headquartered out of the Netherlands. So if you're a US investor, this would be a foreign investment. Now, we're not going to bury the lead. Let's go ahead and jump right into it. Back towards the end of April, so say a week and a half, 2 weeks ago, it was announced that there are plans to buy back up to 10% of issued shares. Okay, now this is to offset shares issued to employees as part of their compensation, in addition to retiring shares and reducing the total float. So essentially, this 10% buyback would provide significant support to the share price, as well as reducing the float of shares. And this is in addition to an already existing share buyback program. Back in November of 2022, a share buyback program of 12.2 billion was authorized, and that was set to run through the end of 2025 here. This announcement from just a week or two ago is set to run from April 23rd of 2025, so now through October 23rd of 2026. So this new buyback program that they will have, once it's approved, have the ability to purchase up to 10% of shares, will run for the next year and a half. Now, with the buyback that already existed, there was activity. So from January, we'll just say at the end of January 2025, they had repurchased 140 million worth of shares in the range of, let's say, the low 700 share price. That lot of 181,000 shares was repurchased. Then in early February of 2025, they repurchased an additional 457, let's say 458,000 shares, which was a $350 million purchase. And then lastly, in April of this year, so just a month ago, they repurchased 774 million worth of shares, or I guess, excuse me, scratch that. It was actually $840 million worth of shares, excuse me. It was a euro to dollar conversion there. So just in April of this year, $840 million worth of shares repurchased. And so that brought the year-to-date total of $3.8 billion that they have already executed on the existing share buyback program. And now they're authorizing a new plan that would potentially authorize them to purchase up to 10% of the shares. So significant share buybacks have been executed, will continue to be executed, and provide support for a share price that's been cut by a quarter here. Now, if we look at what's going on with ASML, there are significant concerns around the tariffs, okay? This is a foreign company. If now typically we've seen tariff exclusions for semiconductors and semiconductor equipment. Certainly this is a company that would apply to. We're not going to want to limit the importing of this type of technology to the United States, but as it would impact, let's say, a country like China, there's significant restrictions around some of this equipment, particularly the type that ASML manufactures in terms of exporting that equipment to China. So we'll have to see how that plays out over the next year, over the next 3 and 4 years under the current presidential administration, and that will have a direct impact on ASML revenues. For the annual revenue, we saw this peak out in 2023 at 30.4 billion. In 2024, it fell beneath 30 billion to 29.3. Now, it's hard to forecast given the uncertain political times, but currently we are estimating 2025 revenue to be 36.5 billion, so a massive increase from 2024, 29.3 up to 36.6, let's say. And then for 2026, we're expecting it to break past the $40 billion mark for 2026. Looking at the EPS guidance for the next 3 years, we're expecting nearly 33, 15.5, and 21% EPS growth for the next 3 years. And like we already kind of talked about with revenue, we're expecting sales growth of 24, 9.5, and 12.5% for the next 3 years. That would put revenue at 45 billion in 2027, which would represent an 18.3 price to earnings ratio at current share price. Extremely profitable business model. Very good 52% gross profit margin and an unbelievable 28.3 net income margin. You look at the balance sheet, they've got 4 billion in debt offset by nearly 10 billion in cash. So extremely healthy position. By no means is this company at risk, even during these uncertain times. We mentioned the dividend yield is now over 1%. Historically, that's been closer to 0.5%. You're getting $7 annually in that dividend distribution. The previous ex-dividend date was April 28th, and today, well, I should say, I'm recording this on May 6th, which will be the payout for this quarterly distribution. We see the dividend growth history. Obviously, it looks ridiculous, but in a good way. In 2014, the distribution was 84 cents. That exploded up to $6.63 in 2022, a slight dividend decrease in 23 to 6.45, and then back up to 6.71 in 2024. And again, for 2025, currently it's at 6.95. Taking a little bit more of a look at this dividend, you'll see this yield here. So your 1 year yield on cost would be 0.77% because shares have been declining. Your 3 year yield on cost is 1.23%, and your 5 year yield on cost would be up to 2.41% as shares continue to, well, hopefully continue to appreciate. That yield on cost, and along with the dividend increases, will only continue to appreciate with time. Looking at that 3 year dividend CAGR, you've got 5.1%. 5 year CAGR 21.5%, and 10 year CAGR 24.8%. So unbelievable dividend growth story here that should continue out as long as they're allowed to continue to operate. I know things are uncertain right now, but it's presenting a fantastic buying opportunity with shares having a quarter of that price lopped off just over the past year. Payout ratio is just under 22%. So given the unbelievable margins, the balance sheet, and the 22% payout ratio, this should be an unbelievable company to own from a dividend growth perspective, as well as a share price appreciation perspective, given these EPS estimates for the near term, as well as the revenue guidance. So thank you very much for watching. Just wanted to get this out. Exciting news. Anytime you get a up to 10% potential share buyback from a company to be executed over a 1.5 year time, that's great support for shares that are already been taking it on the chin. So I hope you learned something. Hope you got something from it and enjoyed it. If you did, please give me a like, a subscribe. Take care.